Hello everybody, Steve Griffiths here, developer of the MTPredictor software program. In today's MTPredictor video, I'd like to look at the power of our DPs and how to do your MTPredictor analysis in conjunction with your higher time frame DP support and resistance areas. But as usual, we start with our risk disclaimer and remind you that all examples in these videos should be considered as hypothetical. No trades are actually taken, they're just shown for illustration and trading purposes only. Remind you there's a risk of loss in trading and investing. Put another way, all professional traders know and understand, but more importantly accept that losses can and will and do unfold. It doesn't matter what trading approach you have, there always will be losing trades. Right, let's have a look at an example on the YM on a 3-minute chart from last Friday. For those of you who are new to MTPredictor, it's worth pointing out that MTPredictor is not a black box system. We have automatic setups on our chart. We have history triangles here that show you setups that would have unfolded at the time, and we also have a trend indicator here color coded for blue for up, black for in the process of making a reversal, and red for down. So it's not a black box system where you take 100% of the trades. Why? Because over the last 30 odd years of experience I've got in following the markets, come to realize that basic markets are random about half the time. In other words, no approach will actually work. The markets are basically in a random phase. So half the time you shouldn't be doing anything at all. So in the other half we then look to see whether the market pattern is clear. So how we do this, we go to a higher time frame chart. So here I'm using our NinjaTrader add-ons for NinjaTrader 8. So if you're looking to follow setups on a 3-minute, you'd go out to a time frame between 3 and 5 time frames higher. So in this context, it would be the 15-minute. If you say trading daily stocks, you go out to a weekly chart. If you say trading hourly forex, you'd go out to say a 4-hourly chart. So for this, you go back to previous highs and lows. We cover exactly which ones to use in our MTPredictor training for customers only. But before Friday even opened, and this is Friday here, so you go back to before Friday even opened, you see we had a previous swing low here. So we right mouse click, we do decision point, and can you see how that gives you an area on the chart? But more importantly, it's on the chart in advance. It's there before the market even gets there, so it's a leading indicator. So let's see what happens as the market declined down on Friday. If I drag that out a bit, you'll see this is Friday here. The market came down and it then found support at that level. Remember, that was projected in advance. So how does that reflect how we then do our analysis? Well, here we can see our automatic setups, but on the way down here, even though our MTP trend was black, we hadn't reached our support zone. In other words, the market trend was still down into this support zone. It's not till we get to this support zone we then look to see whether a reversal is in the process of unfolding. So if we get to the support zone, we see here a couple of things happen. First and foremost, we had a VS or volume spike buy setup here. This was at our higher time frame support. Our MTP trend had gone grey to show you in the process of making reversal. So this first one here was a good one to take, because the picture had become clear. In other words, a reversal on the shorter time frame was unfolding at higher time frame support. So if I right mouse click over this blue buy bar and I do analysis, this then gave us a potential trade setup. Remember, we use position size, in this case less than 2% of a sample $20,000 account. You can obviously set up different account sizes if you wish, and that will obviously change the number of contracts that can be traded. So here it will allow you to trade 3 contracts. So you'd have gone long at this level, the market went up a bit, took you in, and then it came down, it would have actually stopped you out. Now it's important again, when I said at the start that losses can and will and do unfold. So I think it's good that when software vendors demonstrate their products, they do actually show losing trades, and that's what this would have been. It would have been a losing trade. Losses can and will and do unfold. But because we use position sizing, that was what we call a 1R or 1 risk unit loss. I'll clear everything off. Can you see here we had a history triangle? So if I right mouse click over this blue buy bar here to analysis, this would have then also been a VS setup at the time. The reason it was a history triangle was because our swings were recalculated as it came through here, but we don't hide anything. We actually show you that at the time there would have been a setup there at that particular time. So here this was a VS setup, a volume spike setup. Our MTP trend was black. We were still in our higher time frame support. This time it would have taken you into a long trade. The market went straight up to the first target, which was here, and got a 2-hour profit. So this would have been a profitable trade, but more importantly, the profit would have been twice or 2R, in other words, twice the initial risk or twice the loss that we had before. And that's what we're aiming for. We're aiming for not a high percentage of winners, but we're aiming for trades where the profits are large, not just in dollars or whatever currency you're trading, but large in relation to the losses. The market then went up. It then gave us a VS sell. Now, even though our MTP trend was black, this would not be a good one to take. Why? Because we're coming up off this support zone. That's why these DPs are so important. That's what I'm doing this video, to show you why the DPs are so important, because this gave you the area of support to then gauge the large degree trend. So here the large degree trend was up, so you would not be wanting to take sell setups, but you would be liking to take long setups here. So the market trend was up, so this TS1 buy setup was now in the direction of the large degree trend. Our MTP trend had gone blue to help confirm that. So if I right mouse click over this blue buy bar, do analysis, you can see this gave us another trade setup. This went to our first target here, where a profit of approximately 5.5 times the initial risk was available. So that was a very good trade there. And as you can see, the profit was much larger than the loss we had earlier. This was actually quite a nice trade setup because it had a lovely ABC pattern going down to the low there. This is even a bit clearer if I go down to a 2-minute chart. You can see there it is. There's the lovely ABC pattern. This on a 2-minute chart was actually a W3 or wave 3 trade setup. So if we right mouse click over the blue buy bar, do analysis, you can see that here our projected target was our typical wave 3 WPT, which is our target for a W3 trade setup. It didn't reach that on the Friday, so I'll just grab that and bring it down to where the close was on Friday. You can see that there's about the close. So if you'd have traded that, the profit would have been almost 10R, 9.5R profit, or 9.7R profit there going into the close. So that was a very nice trade setup with a lovely ABC correction going down there into that W3 long trade. But the main point of this whole video is how you should use the DPs to get the larger degree support and resistance zones. That also then helps you gauge whether the picture's clear, and that's why I think so many people actually have problems when they're trading, particularly when they're using Elliott Wave. That's why I developed my unique isolation approach to Elliott Wave. In other words, we're using Elliott Wave, or we're only doing our analysis when the picture's clear. And it's understanding that half the time, or maybe even slightly more than half the time, you may be getting trade setups on your chart, but the pattern's not clear with respect to the large degree trend, and that's why it's not good to trade when the picture's not clear. So that's where we use our DPs of our higher time frame charts to then give our larger degree support and resistance zones, and then we look to see trade setups on the time frame we're trading, but with respect to this higher time frame support and resistance. In other words, we're only looking to trade when the picture's clear. And as you can see from this example from the YM from last Friday, it means we actually managed to catch the low of the day there very nicely. And even though we did catch the low of the day nicely with our DP support zone, there still was a losing trade. Losses can and will and do unfold. No matter what trading approach you do, there will always be losing trades, but that loss was kept small in relation to the profitable trades that unfolded later, and that's what you're looking to do with your trading. Gauge when the picture's clear, then find your trade setups, have losing trades, keep the losses small, have profitable trades, but the profitable trades are larger than the losses, and that's your aim as a trader